Hey, good morning, everybody. Thank you, Lisa. Good morning, and thank you very much for the willingness to get up this early on day 3. We're going to go rapid fire for you this morning. We continue to get so much positive feedback with regards to the sonar market experts that, yes, backed by popular demand. One more time, we're going to give you your daily watch, your commentary, your analysis, your guidance from utilizing sonar and the data within sonar in so many different ways. So to kick things off, our leadoff hitter, our Chief Insights Officer, if you have data that you're interested in talking about, if you have data questions about what's inside of sonar and how they are working, please make sure that you spend time with this guy before you leave Atlanta. Dean Croak.
Thank you, George. Good morning, everybody. Thank you. I'd like to talk a little bit about the Atlanta market today. It's one of the top 2 markets in the country. Generally, it goes back and forth between Ontario, California, and Atlanta. Pushes out about 4.25% of the outbound tender volume every day in the truckload space. Things are starting to heat up. If you have a look at the chart, what you'll see there is that the green line is the amount of volume that's being pushed out into the market. It's been rising in the last 10 days. It's up about 10%. The red line is the outbound tender reject, which is a measure of capacity. Capacity is showing some signs of tightening. We can see there that in the last couple of days it's up about 20 basis points. That's not a big movement, but it is a sign that things are starting to tighten. For the most part of the year, Atlanta is kind of a balanced market. Inbound, outbound volumes tend to balance. But what you can see here is if I go out to the bigger view, this time last year there was a lot more volume. From about now onwards, volume out of Atlanta starts to increase. And our message to shippers today is get your freight out of the warehouse, don't store it because rates are going to rise.
Thank you, Dean. Well done. So as you can see, we're doing our 1 minute. Again, thank you, Dean Croak. So we're now going to move and shift over toward what Zach Strickland talks about typically. Zach will look at the marketplace very often from the carrier perspective. So our market expert, carrier perspective, Zach Strickland.
All right. Thanks, George.
You're welcome.
Yeah, today I want to talk about the freshly rejuvenated El Paso market. So over the past 6 months or so, it's been quietly stable and steady. But I've got the van tender rejection index pulled up here, along with the long haul tender rejection for the El Paso market. These seem to be the 2 most volatile components of the overall tender rejections going up. So as tender rejections increase, that means there's going to be tighter capacity in the area, which means you can either, if you're a broker, you're going to get higher rates. If you're a carrier, you're going to have more chances of finding a load out of this market. So the El Paso market is looking like a market that, even though it's very small, only 0.27% of the total outbound loads in the entire country come out of there, but there's probably going to be a little bit more opportunity there, especially if you operate in this region. Thanks.
Thank you, Zach. Go Sox. We've had so much positive feedback and appreciate all of that. And Craig talked about the surveys. Please make sure that you in fact respond to our surveys. But around the positive feedback, a couple of the really hidden gems that we've uncovered for you here during Transparency19. Sarah, who drove the yellow Porsche yesterday and hit 108 miles an hour on the straightaway, and our intermediary market expert, Donnie Gilbert. Your sonar slide looks a lot like a blank screen, but now it looks a lot like a tree map. Donnie?
Thank you, George. I brought the head haul index today, George. And the head haul index is a way that we measure kind of the inbounds and the outbounds capacity into a market. So we take all the outbound tenders and we subtract out the inbounds. So we're going to get a positive number if there's more outbound loads than inbound loads, which means we're calling it a head haul market. And if there's more inbound loads than outbound loads, we're going to call that a backhaul market. So it's a good way to kind of measure the capacity for that day. I've brought that information here today on what we call a tree map. And this map here on your top left is the markets with the largest head haul index, which I believe today is Los Angeles. And on the bottom right is the market with the smallest index, which is a negative number. The markets that are green on the board are increasing in numbers. The markets that are shown in red are decreasing from the last time that we measured this information, which we measure this daily. So Los Angeles has grown 6.9% since yesterday. So quick information, in the middle, they're balanced markets.
Thank you, Donnie. Well done. Appreciate that. Okay, now we're going to shift over to those macroeconomic conditions, the things that you can look at in sonar from more of a strategic perspective. We gave you a lot of insight there with our first three folks around what can you do tactically or operationally today, working on data that is that real time, that near time that we've got. Let's shift a little bit more into a macroeconomic view of this with our housing, construction economist, Anthony Smith. Anthony.
Thank you, George. Today we're looking at two barometers, the Home Purchase Sentiment Index, which is released by Fannie Mae, and the DAT's flatbed barometer. The Home Purchase Sentiment Index measures the consumer's outlook towards purchasing a home and their economic outlook over the next 12 months. When consumers are feeling confident, these homes are being built. We see that there's usually a correlation between the two, with sentiment leading the flatbed barometer. So there's going to be a lot of flatbed activity when the consumers are in a good place to buy these homes. As of now, supply is not quite meeting what the demand side is calling for. So we have an uptick right now in the Home Purchase Sentiment Index, and this is likely going to lead, we're hoping, to some activity in housing starts over the next few months as we get into the spring season. Within this, we have many catalysts playing into this, such as lower mortgage rates, but we are optimistic and seeing some upward movement going forward. Thank you.
Nice. Thank you, Anthony. Well done. You can see in the high definition behind me that in the name tags, the market experts, it says market expert on there. That demonstrates that we consider them, and we want to make sure that you know who they are, and we consider them the kind of people that you can talk about, and they've got that kind of brain power that they can bring to you and they can bring to the sonar users and bring you that kind of value. Mine, on the other hand, has my name on it, which clearly means I can't remember my own name. But with that being said, speaking of feeling smarter, here's a recommendation for you if you are a sonar user. Read our stuff. Read John Kingston's Oil and Energy. Remember whatever portions of that you can and talk about it inside your organizations. Talk about it with your friends. They're going to think you're very smart. John, let's hear it.
Diesel's been kind of the runt of the litter this year. As you know, prices bottomed out on Christmas Eve. Christmas Eve was crazy. Markets usually don't fall on Christmas Eve. They generally go to sleep. Prices have been rising for everything oil-related ever since then, but diesel's been the one that's lagged the most. As a result of this, refiners were disincentivized to make a lot of diesel. They wanted to make a lot of gasoline because the gasoline markets were really strong. As a result of this, finally, you're starting to see that the price of diesel is starting to rise faster, just really in the past couple of weeks, faster than the other markets or is falling less than the other markets. And one of the reasons for this is a decline in inventories. What you see, the green there, is the level of diesel inventories, and they've been drawing recently, and you see the price of diesel below that. That's a retail price of diesel. So right now, at least for now, diesel has been the strongest market in oil. We'll see if that continues. Ultimately, it will track the overall trend of the market, but diesel's got some strength behind it as we speak.
Excellent. Thank you, John. Well done. I told you. You feel smarter now, don't you? I know that I do. There's a lot going on, obviously, in the markets that we've been talking about. I think over the last couple of days, one of the things that you've seen as we've talked about some of the modes that we are now providing analytics and indices around, one of the things I think that I've heard some talk about is there's so much volatility, so many things going on in intermodal that folks didn't know about, and I want to thank Mike O'Brien for bringing that to your attention. So, Mike, what's going on in intermodal?
Thank you. Today we're looking at intermodal volumes, and it's starting to look like it's intermodal versus truck. In the blue there you see the CAS index, which represents contract intermodal rates, overlaid with the RTOIC, which is container volume, and then the DAT spot rates for van. As you can see, the intermodal rates are rising consistently, volumes are down, and then the truck spot rates are way down. In this scenario, you have to start thinking that there's a lot of battling for that freight, and the trucks are getting in the mix, and there's some significant rail to road conversion at this point, which is the total opposite of what we saw last year when it was crazy. You see that spike back in the fourth quarter where rail volumes were so crazy that everything was getting put on intermodal that could. So it looks like there's a big conversion from rail to road at this point, and that's why intermodal volumes are declining.
Thank you, Mike. Hardest part of my job right now is, unlike when I get to do some of the one-on-ones or panel things, I get to have follow-up questions, and I would love to have follow-up questions with each of our experts, but you can actually do so. Find them in their booth, or if you are a Sonar subscriber, reach out to them. They are available to you. So speaking of the multimodality that we're talking about right now and some of the volatility that really does give some directions on what the overall market's doing, let's talk about air cargo with Jesse Cohen. Jesse.
Thanks, George. Yesterday, Airline Industry Trade Association, IATA, reported flat March cargo volumes and a soft outlook. The green line on the Sonar chart is the ISM Purchasing Manager Index, which IATA believes is highly correlated with world trade volumes. April was down 3 points to 52.8, meaning slower new orders, but still above the 50 benchmark level. But the orange line for manufactured exports, which IATA sees aligning well with near-term air cargo growth, slipped for the first time in 3 years below the 50 benchmark level, meaning falling orders. Clearly, uncertainties on trade, tariffs, and Brexit are increasingly weighing on world air cargo markets. That said, air cargo usage spikes with supply chain disruptions. The latest threats of immediate tariffs on China could mean an air freight rush and a temporary tightening up of space and rates. So short term, we could actually see a boost in the air cargo business. Thank you.
Wow. I guess it would show my level of smarts by going, huh? Excellent. Thank you, Jesse. That's great stuff. Okay, I'm going to keep getting smarter. I'm going to go one more step. We've talked about it yesterday as we've now gone much more global in Sonar and in looking at maritime, at looking what's going on in the world of containers. You really do then see correlations that are impacting the North American market. And I'm looking forward to what Henry Byers has to say today. Henry?
Thanks, George. So over the last couple of days, we've given a lot of attention to the Trans-Pacific and how that applies to ocean container rates, specifically 40-foot container rates between the China and U.S. So I wanted to flip over to the Atlantic and talk a little bit about what's going on there with some recent volatility in the marketplace. So for 40-foot container rates from Europe to North America, they're actually up 64% year over year. And from North America to Europe, they're actually up 40% year over year. Now, some of this is a result of the China and U.S. trade disputes, some readjustments in the global supply chain, some U.S. importers shifting some sourcing to Europe, things of that nature. But also, a lot of this has to do with the recent announcement of $11 billion in tariffs that Trump plans to levy on the European Union. So you can see the volatility in the market. U.S. importers are trying to get ahead of the game, get their imports in, therefore rates are increasing.
Excellent. Thank you, Henry. And as I said a day or so ago, if what's going on within the trade wars, if you're feeling as if there might be a pinch on that 401k or whatever, and you're feeling a little bit like you need to vent on somebody about what's going on in trade, feel free. Henry will be more than happy to take responsibility for everything that's going on in our retirement funds. And if you don't think that Henry can beat all of you up, you can't see just how tall he is. All right, everybody's got a cell phone. Everybody's got a weather app. Everybody can look at it, and it's telling you what's going on in Atlanta right now. Excellent. You're thinking about getting out of Hartsfield, but what's going on from the impact to the freight and transportation industry in those areas where the trucks, the trains, and all of the other methods of moving freight around, what's going on with the weather that is the primary and largest impactor on that. That's why I've heard so much feedback when people have been looking at Sonar and the things that have come out in version 4.0 around what we're showing in weather and all of those things that impact it. So with that, here's Nick with the weather.
Thanks, George. Good morning, everybody. More severe weather out in the Midwestern states. Yes, there will be probably at least minor to moderate delays in some freight movement through areas like Dallas, Austin, Little Rock, Oklahoma City, places like that. There were about a dozen tornado reports out of Texas yesterday, several from surrounding states. There'll be more of that happening too. So there are going to be some delays, a lot of wet roads in that part of the country. But there's also going to be snowfall, believe it or not. It's springtime and it still snows in parts of the United States this time of the year. And we have a great feature on sonar which shows you possible future road conditions based on the weather. It's not just what's falling out of the sky that's important, it's the actual road temperatures and what the road conditions will be like. And this is showing you out west where the Rockies are going to get a lot of snowfall later today and through the nighttime. And you'll see that the road conditions, the color coding changing from blue, which are wet roads, to the red shades, which shows you that they'll become snowy and slushy. George, back to you.
Thank you, Nick. All right, thank you. Let's hear it for the market experts. Much appreciated.